After a 17% rally towards 56,000, Bitcoin is appearing to run out of steam. Will Bitcoin continue lower? Are we entering a high timeframe downtrend? And exactly what do the bulls need to do to regain high timeframe control? These are questions we're answering in the video. Let's jump in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. As you can see, Bitcoin is continuing to the downside on the short term, failing to sustain above the leading span B upon the breakdown on our prior 3-day close. In today's video, we are going into massive amounts of detail on both the macro and the short-term charts, discussing absolutely everything from macro expectations, bearish and bullish scenarios, short-term expectations and targets, and even the total market caps. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is the first link down below. You will get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join us in VIP. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Alongside all of that, you'll also get access to our group chat, so you can find out more information about the different group chats we do have in the pinned comment of the free channel, where you can also find out all information about how to join the VIP and what the VIP is about. Again, to contact me to join, go ahead to the free channel, click the pinned comment, and click my name right over there to go ahead and get access. Let's go ahead, guys, and jump into the video. So as we can see on the short term, Bitcoin managed to break again toward the downside as a consequence of a developing rising wedge formation over the past 24 hours. We had that upward grind, and again, that upward grind, we had our converging uptrending support and uptrending resistance, which was a classic rising wedge formation. With that, we eventually saw a breakdown of the RSI, signifying a negative momentum shift, and exactly one candle later, we broke below the uptrending support, resulting in a short-term correction for Bitcoin to 55k, just under 55k. Now retesting a short-term support level as marked by this horizontal green level. We'll be discussing in massive detail in just a moment what we expect to occur next, but we can see on the short term just how Bitcoin has actually seen that little pullback over the past 24 hours. Moving over to the DXY, we can see on the DXY we are still in that level of support. Again, if you've been following the channel, you would know we've been expecting a correction to that sell side liquidity level for quite some time, and we came down, retested our support, and rejected and retested our sell side liquidity. So the DXY has almost finished that rejection and of course that reversal. We are now retesting our area of support at 103. On the short term, we could see a continuation to retest our respective yearly long uptrend. However, while we sustain above this level, we could see short-term reversals develop to that 104 region. Again, a breakdown of this uptrend will result in a yearly long level of resistance, or should I say support, for the DXY breaking, and that will be incredibly bullish for risk assets. But until then, we are nearing an area of support, an area of which we could see a bounce develop from. Pay attention to that. The S&P 500 is not looking very good, guys. We saw actually a pretty good attempt on that daily. I'll go to the daily chart to reclaim that 53k, that 5,300 level. You can see there's massive wicks toward the upside, trying to get above that 5,300 level, but unable to do so on that daily. Now, we do have 1 day and 22 hours remaining on this daily candle close. And again, with the 1 day and 22 hours remaining, we definitely need to see that candle get above 5,300. Otherwise, we will have, for the first time in a year and a half, a structural break of the trend. And again, if we look at the breakout point, we had a breakout point over here. We entered a uptrend. This is when the uptrend started. We established our prior highs. These are all going to be our prior high points. At no point during this entire year and a half uptrend did we break below these prior established highs. We retested, we didn't come near it, we didn't come near it, and now we are seeing a breakdown of that prior high point. This is the first sign of high time frames trend shift and a first sign of high time frame structural weakness, a very bearish sign which could result in a continuation lower if we do not sustain above that 5,300 level. So not very good for S&P 500 over here, and again that can bleed into other assets such as Bitcoin if we see that macro continuation. With that being said, guys, let's jump into Bitcoin. A quick summary of our topics today. We're going to be going over the total market caps. We're going to be discussing some key high time frame levels to be paying attention to. We'll also be discussing macro reversal points. And jumping over to Bitcoin dominance, we'll be jumping over to the short-term price action, we'll be going over the macro charts, and of course finishing up on the daily. So without further ado, we'll get into it. But if you're interested in 15% off all of your trading fees for life, and that'll literally save you not 10,000, but maybe even close to 6 figures for the rest of your life if you do consider trading for a long period of time. I know it saved me a hell of a lot of money. You can sign up to my links down below for BitGet, BitUnix, or BingX for 15% off all of your trading fees. Go ahead and click the links to sign up, and we'll play an ad and get back into it. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, BitGet and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the BitGet link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to 5,000 US dollars in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, BitGet and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's go ahead and get stuck back into the video, and we're going to be taking a look at Bitcoin's short-term and horizontal levels to start, discussing what to expect next and what is happening on the immediate price action. Then we'll jump over to the macro and daily, and then finish up on Bitcoin dominance and the total. So as we can see, over the past couple days, Bitcoin saw a fantastic, there's absolutely no doubt about it, we saw a 17% bounce from the $49,000 region, almost completely filling the entire correction we saw down back on the upside. And if you're following us on Twitter, you would know we told you guys that we believed the bottom of that correction was 47 to 49k, and from that region we did see a fantastic bounce. Now that doesn't mean this is going to be the bottom of the potential high time frame downtrend we're entering, which we'll discuss in a second, but it was the bottom for that recent rejection and correction toward the downside. So congratulations, first off, a fantastic move. Over the past 24 hours, however, we have seen a fair amount of weakness here for Bitcoin. We saw a classic rising wedge pattern, and if you don't know, a rising wedge pattern is a pattern of which we have a converging uptrending support and uptrending resistance, which makes this triangular type upsloping pattern. It is a rejection pattern. It is a bearish pattern. It is a pattern of exhaustion. It is telling us, although the price action is moving upwards, the volatility of the price action over a period of time is decreasing, and volatility is an expression of strength. So as we see the price action climb, we see exhaustion start to build, and eventually when the trend cracks, which we do see, we see a reversal in the trend. And that is exactly what we saw here for the rising wedge. And if you are in the VIP channel, of course, you would know we actually planned for a short on Bitcoin as a consequence of the breakdown of that wedge, which has played out fantastically. But you can see just how that short-term correction has developed. So let's take a look at the short-term expectations. If we take a measured move, primarily for Bitcoin, we take from point 1 to point 2 and we apply it to the breakdown point. The measured move expectation for Bitcoin is going to take us down to this $53,000 region. So slightly above our range low or our point 1 of our rising wedge. Now we do generally know with what rising wedges, the measured move targets for all structural patterns are not definitive, guaranteed certain targets. They are more so ranges of which the price action could move within during the next period of time we are watching the price develop over. Now, if we do see the price action come down and fulfill or complete this measured move expectation, we would be looking for reversals to develop within that targeted range of the measured move. So taking a look at the short-term price action, we can see Bitcoin is broken down from the wedge. We have established and we are retesting a short-term support level. If we were to break below this short-term support level at 54.6, we would then expect the price to continue toward the downside into our lower range between 52.8 and 51.6. This would fill again the measured move expectation of the rising wedge, as well as retest the point 1 of the rising wedge or the start of the uptrend. This is where we would be expecting reversals to develop from that would sustain or lead to strong reversals. On the short term, we are retesting a support level, but it is unlikely this support level results in a strong reversal. It is unlikely, it could happen, but it is unlikely. The likely scenario, this is just a short-term little bit of support before we see that extended correction into that range low. So expectations for Bitcoin, we are watching for bullish reactions within this region. Again, looking at that liquidity range high to point number 1 of the wedge, the red line. This region, we are looking for bullish reactions for reversals. If we see strength develop here, we would look for reversals. If we do not see strength develop here, we could see the price action continue back to our sell side liquidity at 49,000. Now again, if we were to drop below sell side liquidity, we see an extended correction to 47,000. For the bulls to get back in control here, Bitcoin will need to break back above, we'll show you, 58.7. So let's zoom out over here and we can see 58.7 was a key level of resistance for Bitcoin historically. Right over here, let's go ahead and zoom up on it. You can see this level of resistance was our prior level of resistance in which we broke above after about, we're looking at about a week. That was about 1 week of sideways consolidation. We broke above and we saw that directional continuation upwards. So until we clear that level of resistance, we do run the risk of continuations back lower. If we are able to clear that resistance and the 50 EMA, the bulls will be back in control and we can then talk about higher targets. So from the bounce of 49 to 47,000, we have fulfilled the bounced expectations. We have met those targets that we were expecting. We have seen a fantastic bounce. On the short term, we are now starting to see some exhaustion develop, and that exhaustion is expected to take Bitcoin lower, provided we sustain underneath the 58.7 and 50 EMA. If we do see a correction lower, which is most likely, we are watching for reversals from around 52.4 to 51.6, and if we drop below that, we could see continuations to these low points at 49,000. Once again, I'll say it again, for the bulls to get back in control, or for me to say we're going to 65, we're going to 70, I would need to see the price action get back above 58.7. That is going to be our high time frame levels. Again, we can zoom out a little bit over here to the daily so you can see those levels a little bit more, and you can see how. Actually, let's go ahead and just get rid of all these lines. You can see how, again, the VRPV can suggest these areas of liquidity. Once again, this is going to be our high time frame area of support. If we come back into here, we are watching for reversals to develop. If we lose this level, we have this massive VRPV gap, which we could see a higher time frame correction downwards. And again, for the bulls to get back up in control, we need to breach this prior level of resistance. And as you can see, we have seen this level act as support support numerous times. So 58.7 and above, we are bullish. Until then, expect continuations lower for Bitcoin on the short term. Let's go ahead and jump over to the high time frame. So as we can see here, this is our daily chart, and this is where we have a bit of an issue, because as we can see already, for Bitcoin to become short-term bullish, we need to break above 58.7, which is sitting about this region over here. Now, if Bitcoin were to continue lower into that $52,000 region and reach the low range of the wedge, we would, as a consequence, break back underneath the descending channel formation. So the expectation is that Bitcoin actually breaks back under this region as of right now. But again, we are watching the descending channel formation from a daily perspective. So it does not matter if Bitcoin breaks underneath the descending channel, it matters if we close a daily candle underneath. And that is why we think the best or most likely scenario now for Bitcoin is that we see that short-term correction into this range, and then we see that reversal develop, wicking right underneath this descending channel formation once again, only to close above it and continue higher. That is the scenario we are watching out for. Now we have to talk about the worst case scenario. If Bitcoin does close a daily underneath that support, that would be the data point which has been a discrepancy in comparison to all the daily retests of highs and lows, meaning in the entire 5-month period, we have never seen a daily candle close above a high or below a low, and therefore by closing a daily candle above a high or below a low would suggest that this is a possible continuation or breakdown of the structure. We have to take that at face value. So if we were to see a breakdown of the daily, and there goes my light, it has completely fallen off, I'm just going to keep going. If we break down on the daily, we will definitely or most likely see this channel invalidate, and we could see that higher time frame target, which is going to be that $47,000 region targeted. So let's move over to the macro charts now. And again, I don't want to make it too grim. I don't want to be too bearish. I want to be objective and realistic, and the fact of the matter is the charts aren't looking fantastic, like we said, until we get above 58.7. If we get above 58.7, the charts are going to look very good again. Everything is going to be very good again. But until that happens, we really are between a rock and a hard place. So if we move over to the 3-day chart here, we can see we've also seen a 3-day close underneath the leading span B. And this is a very bad sign, because the last time we closed a 3-day candle above the leading span B was right over here. This was the start of the uptrend, right? The start of the uptrend. And we have now closed a 3-day candle underneath the leading span B, which could be the start of a macro downtrend. Historically, closing above and below the leading span has resulted in corrections of 15 to 71% every single time. This isn't like once or twice. Every single time in the history of Bitcoin, we have seen breakdowns or break upwards of the leading span B. We see strong directional continuations. In this instance, we are expecting the same. And in fact, in this instance, we saw already about a 13% correction, 12% correction as a consequence of the leading span B breakdown. But the fact is, if we do sustain over here, and if we invalidate this bullish channel, this consolidation is really the only thing we have here now that is supporting the bullish claim. Besides the Federal Reserve printing money potentially, that's a whole different story, but from a structural and technical perspective, this is really the only thing holding up the bullish case scenario. If we do invalidate this channel, it is absolutely no doubt that Bitcoin is looking very, very weak, and we could see continuations lower. So let's talk about that, guys. Again, what we have seen historically is a break above or below the leading span B indicates a high time frame downtrend. A high time frame downtrend is not a bear market, but if we do enter a high time frame downtrend, we could expect retracements to areas of high time frame supports, specifically stating 49 to 47 and potentially 41 to $40,000. Moving over to the weekly chart, we'll bring up the Gaussian channel. We can see over here that historically we do not enter bear markets until the weekly Gaussian channel breaks down. Again, we entered a bear market over here, we entered a bear market over here. only upon the break of the weekly upper band of the Gaussian channel do we enter a bear market. We have not seen that yet. So are we at risk of a bear market? No. Are we at risk of a high time frame downtrend while we've sustained below 58.7? Yes, we are. That is the premise of the video, and that is the key thing I really want to drill into everyone's minds. We are at risk of a high time frame downtrend while we sustain below 58.7. If we are able to get above 58.7, I have no doubt we are going to see the price retrace back into these high points. If we fail to do so and we break below this sell side liquidity, we could see extended corrections and invalidations of the descending channel, and thus invalidations of the one thing that is holding up that bullish case scenario from a technical and structural perspective. Let's go ahead, guys, and jump over to the total. This is the total market cap. Again, the total market cap very much relies on what Bitcoin does. If Bitcoin breaks down from its channel, the total market cap will very much break down from its channel. Now, we do have to take it at face value. A descending channel formation, much like a rising wedge formation, is going to be a pattern of significance. This is a bearish pattern, and this is going to be a bullish pattern. It is a representation of bullish strength. It is a representation of weakness dissipating as the channel goes along, which again is a representation of what we would call a bullish reversal structure. Now, these structures do not have 100% guarantees of reversals. They are pretty good around 70%. So there is a scenario where we do see invalidations of these structures and continuations. However, that is the least likely scenario, but we do have to be aware it is a possibility, and we talked about how that could happen just moments ago. If we do see that level invalidate, we are looking for our next levels of support. We are specifically looking for this particular range between 1.6 and 1.4 trillion, and then if that level doesn't sustain, we look for our lower range at around 1.2 to 1.1. But as you can see, some pretty nasty high time frame corrections over here for the total if we do not sustain above the current level of support. If we do sustain above the level of support and Bitcoin is able to reclaim 58.7, which I do hope happens, we will likely see a breakup and continuation higher. We are very much at a crossroads. The same goes for the total over here, guys. The total market cap is not looking very good. We saw a cataclysmic correction for altcoins right into our high time frame area of support. This level of resistance was our bear market resistance. Okay, we were in a bear market below, we are in a bull market above. We have seen a high time frame downtrend into our bear market resistance, where we would like to see a rebound and continuation. But if we do drop underneath this level, altcoins will quite literally die. That might be it for altcoins for a very long period of time. That is it, guys. Thank you for tuning in. Sorry about the light falling off, but it happens sometimes. I hope you have a fantastic day, and we'll catch you guys in tomorrow's video. See you then.